Anyway, the reason I put that on there, I wrote who's your team, and obviously, in March Madness we start with the NCAA, and it's a great tournament, and everybody's rooting for their team. But then I also I kind of put a slash, and I said, who's your family office team, as we continue all of the different shows that you can tap into here at the Money School. Over the last 3 weeks since we started this show, I've gotten a number of emails. I've had a number of meetings with people just continuing to look for guidance, which I don't think there's anything wrong with that. Obviously, we're all looking to continue to sharpen the saw. But then I want to make sure that you don't overdo it. I wrote down a couple different things that I've been telling people for the better part of 20 plus years. Here's one: a confused mind does nothing. So, if it's watch a webinar and then listen to a podcast and listen to another podcast and then, but never do anything, well, that's not helping you. So, I put everything in my professional life and personal life. And I talk to the clients that I have all over the country, and I say this to them. I said, listen, I put things into this. What's my downside risk and what's my upside potential? And after you can calculate that to what's the worst thing that can happen and what's my upside potential, and do the math. And as the math comes out the bottom and you calculate it out, then you got to make a decision. And then you've got to take action. Said to a gentleman this morning, I said, and I don't think I've said this in the last decade, but a guy used to say to me, there's 3 frogs sitting on a log and one of them makes a decision to jump off. How many are left? Okay, give me that in the chat. It's a tough one. 3 frogs sitting on a log. One of them decides to jump off. How many are left? One decided to jump off and there were 3. So how many's left? You guys are not interactive today. We need some coffee. Sandy, 0. I don't know about that one. Julie Baker, 0. Felix, 0. Okay. So let me ask Michael, why 3? If one made a decision to jump off, why are there still 3? A decision is not an action. Michael, perfect. He's exactly right. Just because you decide that you're going to do something, well, then you have to go take action. Whether it be buy the real estate, whether do an alternative investment, whether it be go get some life insurance, whether it be start an infinite banking policy, whatever you want to do, you've got to take some type of action to get it going. So Michael was spot on. James, he's cheating. I think I gave him that one this morning, but it's spot on. So don't overdo it. And, reconcile, that was the word I was thinking about just a few minutes ago. Reconcile your downside risk, reconcile your upside potential, and then take action. And I employ you to do that in this, my wife and I have been talking a lot about, we're living, the game of life. We're playing the game of life. And there's going to be ups, there's going to be downs, there's going to be curves, but reconcile your upside potential and your downside risk and move forward. Before I jump in, let me give you, my normal monologue, if you will, a little bit, and that is welcome everyone to this week's episode of Shey's Way, where we're going to talk about all things regarding protection, investments, and taxes. Your current plan for today, tomorrow, and the generations to come. Remember, I'm always going to lay it out. I'm going to lay out the truth, the facts, how and what we believe regarding running against the herd of what everyday society tells you you should be doing with your money. Going to press you on what the conventional wisdom is telling you to do, as we believe the conventional wisdom is just wrong. It's no more complicated than protection, investments, and taxes. No more complicated than that. Every week here at the Money School, it's what we get to do, which is work with people all over this country that are going through the game of life, trying to make the best decisions they possibly can for their financial future and their family's financial future. And we have the luxury here at the Money School to be working with those people every week. So a couple of things I said last week, 2023, don't lose momentum. and continue to sharpen the saw, take action, whether it be, again, alternative investments, real estate, insurance, protection. But again, lay the foundation and then take step two. And then what I told a gentleman this morning, it's not about how much money you make. It's about how much money you keep. And taxes come into play with everything that we do. Couple things that a number of people have said that they're enjoying is this. It is not sophisticated confusion. It's mature simplicity. In everything that you're doing, anything that I'm going to continue to talk about, it is always going to be mature simplicity. When things get too confusing or if it's too sophisticated, again, what I call sophisticated confusion, you're going to need Advil, and so is the other person that's probably talking to you about it and probably doesn't understand. So don't allow your mind to be confused and always take action. Hopefully, the message is congruent. And if you're getting mixed messages, whether it be participating in qualified plans, alternative investments, again, boil it down, get in touch with someone here that is specializing in that area or that is going to be able to give you good wisdom and start that. So with that said, give me an idea on the people that are here today. And I'm going to say, let's use W-2 if you're a W-2 employee or an entrepreneur in the chat, so I can kind of gauge my audience here a little bit. Okay, great. So when you talk about, I was going to try to share this slide, but when I start sharing too much, then I get confused. But one of the things that I had a slide and has a big picture of the Capitol in Washington, D.C. And it says, is this your business partner, or are you in business with the government as a partner? And as I talk through that in a number of presentations, what I talk about is, are you participating in government plans, meaning traditional IRAs, simple IRAs, 401k plans, all of the different plans, if you will, that the government has created. And the reason that I bring that up is the government created all of these plans, okay, and then they also invented, the Roth IRA, traditional IRA, SEP IRA, self-directed IRA, all of that stuff. And anytime the government creates something, make no mistake, it is not in our best interest. It's going to be in their best interest. And there are a couple of those things out there that they created, but then they put all these rules and regulations on them where it makes it difficult for us to use. And those are the ones that may be a little bit in our best interest. For example, the Roth IRA created in 1997. But then all of these rules and restrictions came into play where if you made too much money or if you were married and made too much money, then you couldn't participate in them at all. And therefore, if you're making a pretty good nickel out there, you can't even participate in them. So then we have to get creative and do the Roth conversion or the backdoor Roth and move money in. And those are some decent strategies that we talk about. But again, it's a matter of, for example, one idea would be if you are a entrepreneur, an LLC, a sole practitioner, or whatever it may be, you could possibly use a SEP IRA where you can make large contributions into that account. I think last year it may have been 56,000, so it's a little bit probably north of that, maybe close to $60,000. You can get into that account and use that as a tax efficient plan to do that. But at the same time, you haven't paid taxes on it. So then at the end of the year, our team's going to advise you to get with a CPA or get with one of our CPAs and immediately backdoor that money back over to the Roth and then invest it. Now, don't have to pay the taxes anytime in the future. So it's a decent idea to be able to make large contributions and then backdoor it immediately that year. And you could do that every year. The reason I say, are you in business with the government? That's the idea. And you've heard me say it before, where depending on whose numbers you believe, there's close to 39 to 40 trillion dollars wrapped up in 401k plans in this country. And make no mistake, that means that money has never been taxed. This is my reasoning. Where is the government really concerned with the national debt? And my answer is no, they're not. Because at any particular time, all they have to do is change the law, pass the law, and then immediately start taxing those dollars at either an earlier stage or at a higher marginal income tax rate. And we have to live by the rules that they put out there. So again, are you in business with the government? And, as yesterday and today, the market is just getting crushed. It's the whatever. I think it's the market sell-off is all over the tube channels today. So, is that affecting you? And if you're utilizing the concepts and the strategies that we talk about at the Money School, most of the time, hopefully that answer is no. That if the market is going haywire, is it really affecting you? Or if the government is doing something, is that really affecting you? And if you're using the concepts and strategies that we talk about, most of the time, I believe that answer is going to be no. Just something for you to think about today. And really, I'll just, again, from an interactive standpoint, is the market sell-off affecting you? Give me some yeses and nos in the chat here for a second, and maybe we can talk a little bit more about that. Sharon says no. Awesome. I know that there's a lot of real estate there with that particular individual, which is good. Okay, Michael, whole lot of cash and real estate. Perfect. Is the market sell-off affecting you daily? Is the question. Host panel says no. Okay, so a lot of I don't think I have a yes yet. So that leads me to believe that you're involved in the concepts and or strategies that we're talking about, which is great, because then you're not at the mercy of what the market, what the government, and really, not only the government, but you could say the world, because obviously the market is reacting to what is going on all over the globe. So again, we've got a couple more notes. Okay, great. Another question I wanted to ask, since we're chatting right now, is for the betterment of the group, and I'll put this out probably in the chat or in the replay. Every month, I want to kind of put out a good read. And what I've learned with a lot of the people that are tying into the Money School and what we're doing in here, some people are reading too many things at the same time. So it's not that I'm looking to give you something else, but in the chat, if you guys don't mind, throw out, what are you guys reading right now? What are you consuming? If anyone has something that they've just gotten through or in it now, put it in the chat. Let me know what that is. James has Take the Stairs. Felix, Power of Zero. Obviously, I know that the One Thing. Sharon, it's a phenomenal book by Keller. The book's recommended by Chris in the Money School. Nothing wrong with that. House Selling for Dummies. The Simple Path to Wealth by J.L. Collins. Simple Path to Wealth. I haven't heard of that one, Alex. Obstacle in the Way, Changing World. Okay. Couple that are on there that that I would give my plug to would be The One Thing that Sharon's getting through. I think I've been through that one 2 or 3 times. Haven't heard of Take the Stairs. Felix, The Power of Zero is a big one. Simple Path to Wealth. Okay. The World is Flat is an older book, but shows how global we are. Yeah, Sharon, I've heard of that one also. The World is Flat. Thank you guys for loading that in. Last week I had Amy Lister, one of my CPAs that I interact with as a strategic partner on. We talked about different contributions into those retirement plans that we talked about and what you can and what you cannot do. We talked a little bit about gifting ability. And I read another article on that today, had a different call with one of the participants last week in regards to gifting and using the gifting ability for life insurance. Just real quick, because it came across Sandy, Atomic Habits is a phenomenal book. Read that a number of years ago, but very, very good. That definitely fire you up regarding that. So if there's any follow-up questions in regards to gifting or qualified accounts or Roth conversion or finding the right amount of your money that you should look to possibly convert on an annual basis and get it out of the taxable environment and move it into a tax-free environment, feel free. I'm kind of taking today, the fourth episode, to kind of clear up any questions that have been coming in, some different areas that I've seen people that are a little bit more confused minds, not really jumping off the log and maybe just over analyzing. What's the old saying, paralysis by analysis, or just, not taking action. And let me click over here on the Q&A. I wanted to correct something last week when we talked about gifting. Your ability this year to gift is actually up from 16, maybe 16.5 up to 17. And one of the questions that came up is from a husband and a wife standpoint. Just think of it this way. You can gift any particular human being on the face of the planet $17,000 this year in 2023. Let's say that you are single with 2 different children. You can gift each one of those children $17,000 for a total of $34,000. If you're married, then you and your spouse have that right and that privilege to be able to do that. So a married couple with 2 children would be able to gift $34,000 per child. In addition to that, somebody asked me a question regarding, let's say you have a child and or a grandchild that are going to college or is going to college, and can you pay the tuition and then also gift? And the answer is yes. Let's say my child's going to college and the tuition that year is 20 grand. I can pay that tuition and then I can also gift up to $17,000 personally or $34,000 as a husband and wife. There are different ways to use your gifting ability in different strategies, whether it be insurance, investments, transferring of wealth, and a lot of those may be just personal situations. For example, I know Sandy and I talked about that last week also. So some of that information may just be personal to your overall strategy or what you may be doing. Wanted to make sure that that you guys know that at the money school, we've got a number of areas that you guys can tie in and continue to sharpen the saw. So on Mondays at 1 p.m., one of our team members will be doing Money Club Monday. Sometimes you're going to see Chris, sometimes you're going to see Stephen Nagy on there, but that's Monday at 1 o'clock. And that's the private money club, where we are trying to match borrowers, lenders, people that have money, people that need money, people that have deals, people that are looking for deals, and putting those people together. Tuesdays at 1, you get, I don't know if it's a plus or a minus, but you get to see me on my Tax Tip Tuesday, where again, we're going to talk about protection, insurance, and taxes, and everything that encompasses, whether it be tax forecasting, making sure that, again, it's not about how much money you make, it's about how much money you keep. And if you're not working with a team that is looking at your tax component of everything that you're doing, not just in November or December at the end of the year, but we're looking at that every month, every quarter, and in every transaction. On Wednesdays, you get really filled up where you can tie in to WTF live stream at 9:30 in the morning. And then there's Wealth Wednesday webinar, which is at this hour every Wednesday. Most of the time, Chris is going to be hosting that, or another member of the team if he may be traveling. And then at 4:30, you get the opportunity to ask me anything. Normally get to have a cold beverage of your choice during the 4:30 hour on Wednesday. Nothing on Thursday, Friday. We figure we filled you up through the week so you can get a good long weekend. And but tie into any and all of these at any time. Obviously, you know that everything that we do is recorded and then it's put up on Chris Nagel's YouTube channel. My shows are being archived on my website. That I'll give you that link here in a minute that you can tie into. If you hear something that I say or want to refresh that, you can always get onto my website, find the webinar from the previous week. Normally it's Tuesday. We get them up there on Sunday. So they're there within a couple days after this live event. Again, tie into any or all of that as much as you can handle. And if there's specific things, then get with the right person. Michael's got a great question that is not as detailed just to him. So I'll share it with everyone. And then and I think, Michael, I'll give you your answer. The question is this: how do I decide whether to make additional contributions to a SEP or convert traditional IRA to Roth and pay the taxes? Okay. So, Michael, here's the answer in a little bit of a broad stroke. The decision is going to be where you're at in regards to your marginal income tax rate, what amount of money that you've earned this year. We use a tax forecasting program, if you will, that kind of loads all of that in. And then there's going to be a sweet spot where whatever you've earned and then some of the additional tax strategies that you may be employing. And then at some point in time, we're going to be able to figure out where your bracket is. Have you just bumped up into the next bracket on the IRC code, or are you needing a little bit of a tax break to get down into the 24 tax bracket area? So you may possibly making additional contribution to a SEP, or we're going to always talk about doing some type of Roth conversion every year. And there's going to be an amount there. One year it may be 60,000. The next year it may be 80,000. Next year it may be 40. Just depends on what type of year you're having. And again, this is why we talk about doing proper tax strategy planning throughout the year and not just in November or Thanksgiving, where you're calling up some CPA that is really not doing tax strategy planning. They're just really doing tax returns. You're calling them saying, hey, can I get some advice here, rather than working with either your CPA, if you have a great CPA, or someone that we know that would consult with you every quarter of the year. And long before the end of the year gets here, pretty much the answer to that question of should you contribute more or possibly convert more. So hopefully that answers that question. It's a really good question. It's about 1:40. I've got about another 5 minutes worth of material. So if there's some other questions, throw them into the chat and we can cover them. That was a yes. Thanks for the answer. I will follow up with my CPA. Okay. Yep. Yeah, Mike will definitely get with them and him or her. It's a pretty straightforward. That's pretty straightforward calculations for any CPA to be able to do. And again, your number is going to change every year. I know that there's a few of my personal clients that are on here, and we talk about it pretty much throughout the year, getting ready for, Q3, the end of Q3, we pretty much know, where things are going to pan out, if you will. This is the area that if you are looking for the archive versions of this show and want to connect, you can go to sterlingwyatt.com. There's a paver, if you will, that says webinar and podcasts. You can go there. All of these are recorded and put up there. And if there are some specific questions that you have that pertain to your specific situation, there's a click here, schedule webinar follow-up. I think it gives you an option to schedule a 30-minute window with me. It won't be with anyone besides me. So, we'll talk one-on-one about your specific situation and what you're looking to do. So again, that's the location that you can find and go directly onto my calendar for a 30-minute follow-up. We go back to, we're at March 7th. So we're, basically finishing up Q1 in 3 weeks. So hopefully, you've got the year off the right way. You're looking for different alternative investments, I think is one of the topics that I'm going to have come up on this show. I'm going to have a guest that specializes in multifamily syndication. So they're basically apartment complexes all over the country. I think that we've participated in about 13 of those in the last 6 months. I know that real estate is a big point of emphasis, if you will, for everyone on here. So look for that to come here in the next week or two.
Your real estate business lives and dies by the network and the connections that you make. After all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action, like so many others have, by going to privatemoneyclub.com and sign up.
I've got 2 other questions here, and then I'll close us out. Wes is saying something like, if it's a gift, is that a write-off towards federal taxes? And I'm not going to tell you it's a write-off. It's you can gift anyone that $17K, and they don't have to pick it up as income, and you're not taking it as an expense. So it's just a matter of you're gifting them that amount of money, and again, it's not, they don't pick it up on their end, you don't write it off on your end. So it's just, you can gift anybody that amount of money on an annual basis. And then lastly, contributions to your traditional IRAs. This year it is $7,000 to your traditional account. If you're over the age of 50, you get either a $500 or $1,000. I can't remember. I just covered that last week. I think it may be $1,000 now, up to $8. And then again, that's traditional IRA, which most CPAs are going to throw out there for something for you to do. I'm going to take it one step further. If that account balance is growing, then we're going to talk about using some amount of that money to do a Roth conversion or backdoor Roth. Again, I did get a question last week about 401k plans that we talked about. Should you be contributing to a 401k plan? And let me just clarify this. If it's an option and your employer is offering that, and it's a traditional 401k plan, take all the free money someone's going to give you. So if they're matching 3% or 4 or 6% or whatever it may be, then and your employer is giving you that money, take all the free money that someone's going to give you. But then get with us and let's look at converting that. Your current 401k plan, your plan summary documents would need to be reviewed to determine whether or not you can do in-service conversions. And if you can, then that's a possibility. Cannot, then obviously that account balance is just going to continue to grow over time. And either when you leave the employer or the employer doesn't want you to be around anymore, either way, then you can look to convert some or all of that account over to the Roth side, and then no free lunch. You got to pay the taxes that year, but now you've moved all the money into an environment that you don't have to pay taxes on in the future. Also on that, your employer may offer you a traditional and a Roth side to the 401k. So we would advise to participate on the Roth side as much as you can. Again, they're not going to contribute on that. They're not going to match on that side, but they'll match on the other. And then most of the time, if you have both options, you can move the money right over. Thank all of you guys for sharing in the chat. Good questions, different wisdom, different ideas. from on the financial decisions. If you're looking for additional information, again, tie into one of our shows, get with us on the chat, get with us on a one-on-one conversation. Appreciate you taking some time today on Tuesday to be here and sharpen the saw a little bit. Look forward to answering more of your tax questions next Tuesday on the next episode of this show. And again, everything that we're sharing here, again, run it by, if you have a tax professional, run it by your CPA. I'm not intending to provide you tax advice or legal or accounting advice. You certainly should consult with your own CPA. And if you don't have one, then we can get you in touch with the right person. So other than that, have a great week. Don't forget to tie into our 3 options for tomorrow morning at 9:30, 1 o'clock, and 4:30. Ask Me Anything. And everyone have a great week. Good being with you. Take care.